If you're waiting for crypto to crash because of the FOMC meeting today, this video is for you. Even though the Federal Reserve came out and raised interest rates by 75 basis points today, and some of your favorite influencers told you this would crash the market, here's what you need to know is going to happen next. Right now, our economy is going through the bullwhip effect, which is causing disinflation to occur for the month of July. What do I mean by that? Well, despite everybody freaking out from the report for June and July, a CPI number of 9.1%, July's report is going to be much smaller and released on August 10th. And when you look at gas prices, rent, and other commodities, we would know that compared to June, these prices are down significantly. Which means August's report is going to show that July shows a local peak top for inflation. And your market makers already know that. They proact rather than react to the market like the feds and retailers. This in front of me is a liquidation chart. We can see the delta spread and how many shorts and longs are being positioned. And what this means is when we're in the red, we're in the billions of dollars in short positions. People were betting on the market to crash on July 27th because they had tons of macro content creators and analysts predicting that Bitcoin was going to crash to 15 or 12K because of the recession or the Fed's decisions at the FOMC meeting. The problem with this is market makers are sitting on tons of liquidity and already preemptively know that inflation is actually overpriced right now, and that your retailers have been factoring in and overpricing a recession. And now that the feds came out and only raised rates by 75 basis points, there's not another FOMC meeting until September. So after the FUD and volatility of the GDP report tomorrow from the media, your next big calendar date for the market will be your CPI month over month on August 10th, which market makers know will be bullish. So what should we expect? First and foremost, if you're in the Kryptonite Discord, you can date back this for weeks and confirm that we have been 100% correct calling the market makers, watching them liquidate short and long positions. Links in the bio if you want to stay ahead of the game and be motivated. Now, it is 9:14 on the 27th of July, but I'll put my reputation on the line, unlike others, and show you exactly what I think will play out. At 21,300, we have a major point of control, meaning there is a ton of supply and demand at that level. And you can think of it like a magnet, as prices like to retract or attract to those levels. But we have to also notice that we have a naked point of control at 23,500, which just so happens to be at the level where most shorts will be liquidated, moving the delta for longs probably up to about 10 billion and only having long positions open. And since the shorts are liquidated, market makers will be sitting on a lot of liquidity. So I expect to see a short push to between 23,300 and 23,500. Then literally watch tomorrow with the GDP report, market makers push prices down towards this point of control. So I'd open a low leverage short, take profits on the way down, and watch the majority of your longs be liquidated. Like and follow if you want to keep up with smart money contracts, as well as stay ahead of the game for our macro economy.